Hey, this is Matt from InvestiQuant. Today is Thursday, September 16, 2021. The markets have seen a little bit of weakness today as we continue to trade within yesterday's range. So this morning, the markets gapped down. We pushed up to around the gap fill area and then dropped. We have since kind of stabilized and are drifting a little bit higher. We're still holding in the bottom half of the range for the S&P. Some of the others, the Russell here is a little bit stronger. NASDAQ recovering a little bit better as well. But bottom line is we've got options expiration tomorrow, and we are trading lower across the board this afternoon. So that's what we'll look at as we approach the close today. We're going to be looking at what has happened historically going into the close ahead of options expiration day when you are below the prior session closing price. So I've selected the 3 p.m. entry here. It'll be set up as a long. Next, I'm going to go into the post-open filters, and I'm going to say that the 3 p.m. price is below the prior day closing price. So if I go to intraday close versus daily levels, I'm going to hit equals next to less than prior close. Next, I'm going to go into the market events library, and I'm going to say it is the day before options expiration day. That's the top option here in active today. So I'm just going to click on that. And then lastly, I'm going to put it above a 200-day simple moving average, and I'm just going to use a 200 to keep as many samples as possible. If I add below a 10, it'll get a little bit light on samples. So I've got above a 200. Now I can click the results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When tomorrow is options expiration day, you're above a 200-day simple moving average, but you're trading below the prior day closing price. So historically, we've got 76 samples in the S&P to examine dating back to 2003. There's 80 in the NASDAQ, 72 in the Dow, and 75 in the Russell. Win rates on these are about as neutral as it gets. S&P coming in at 51%, NASDAQ 53%, Dow 50%, Russell 53%. If we look at the average moves, the average loss is a little bit larger than the average win for the S&P, for the NASDAQ, for the Dow, and for the Russell. So all of them have larger average losses. The win rates are very neutral. You know, the one reason why I wanted to share this one this afternoon is because we have looked at studies similar to this before, and it's often a bullish bias into the close on the day before options expiration day. Many studies can be found around that type of pattern of the day before OPEX, and they're generally favoring the upside. But this intraday weakness added to the study really takes away that edge, and it becomes very neutral. So I'm not seeing anything of interest here. It is very neutral if we're trading below the prior day closing price. Now, if we were to rally back up to above the prior day closing prices, there'll be quite a few other studies that would be applicable, and they do favor the long side. But based upon being below yesterday's close, it is very neutral looking here. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.